What's going on, guys? Today I'm going to be talking about one of the most lucrative stock investing methods you can do. So that's the S&P 500. So this is a chart of the past 20 years of $10,000 invested into the S&P 500. So you can see you already had 10,000 initial investment all the way up to $65,000. So you 6x'd your money just in a 20-year period. So you're probably thinking, what is the S&P 500? Maybe you've heard of it in school, but basically it's the 500 largest corporations or companies in the US, right? And it's weighted by market cap. Capitalization is a company's stock price multiplied by the number of shares that it has, right? So Apple obviously has more than, Cheesecake Factory does, right? It also stands for Standard and Poor's. That's just the intention of it. And then it basically monitors the U.S. economy. So the average returns of it is 10.26%. It ranges, it's basically around 10%, basically each year compounded since its inception. So the way to invest in something like the S&P 500 is to buy a ticker symbol like SPY. So SPY is an ETF, so that's short for an exchange traded fund. So basically that's just a basket of stocks that you can buy that it follows like an index, right? So just like the S&P 500. So you're buying Apple, Amazon, Google, Walmart, all that. And then, like I said, it's basically the health of the U.S. economy. It can even represent the world economy. So these are the holdings of SPY, right? The ticker symbol that tracks it. It's basically identical with the S&P 500. So right here you can see 6.95% is in Microsoft. And let's say Microsoft ever went down for some reason, then the hope is that that one outlier wouldn't affect Apple, Nvidia, which is an AI company, Amazon, Meta, Google, which stands for Alphabet. So that would not affect that because you have all those other companies to help boost it up, right? So that's why, not everything is, too much into one stock, right? And then you have technology as well. So this is like the sector weightings. It's mainly technology. Just obviously technology is one of the most booming sectors in the economy right now. Financial services makes up 12%. Same with healthcare. You have like energy at 3.86%, right? So it's across different industries. And here's just a chart of $1,000 that's been invested over the past 10 years. So this is ranging from May of 2014 up to May of 2024, right? So after 1 year, you only made $13 with $1,000 invested. After 4, you made $317, right? After 8, $11.55, and then after 10 years, you basically, now your market value is what it's called from your $1,000. Now that value is $3,000. So you gained almost $2,000 just from investing into SPY, right? The ticker symbol that tracks the S&P 500. So here's just a chart as well of all of the years of the S&P 500 since its inception. And you can see most of the time it's in the blue. The blue just meaning green, right? You can see, for example, in 2019, the stock market, right, the S&P 500 was up 31.49%. So, 2020, even though that was the year of COVID, it was up 18.4%, right? And every single dip, right, every single negative year in the stock market has been a buy. Even in 2008, when, people were losing their jobs, even though the stock market was down 37%, you can see all of this 26%, 15%, 2%, 16, 32. Even last year the market was up 14%. Even, Warren Buffett, one of the most famous investors, he even said he recommends buying into a ETF or an index fund like the S&P 500 that just tracks it. So here's an investment calculator let's say that you started out with $100. After 10 years, assuming the rate of the S&P 500, since its inception, 10.26%, let's say that it's compounded annually. So let's say that you contributed $100 at the end of each month. In that 10-year period, now you would have $20,000, right? So you basically, compound interest made you $8,425.13. So, I mean, of course, your starting amount was basically 0%, and then you contributed a little bit more. That's just after a 10-year period, though. If we went to 20 years, and now you're at $74,000, right? So you're almost at $75,000 just from buying into this fund, $100 at the end of each month, right? That's $1,200 each year. Let's say 30 years. 30 years, you have $218,000, right? And then, just for fun, let's say after 40 years, now you have over $500,000, just from, like I said, $1,200 a year into the S&P 500. So, how about we say $250 at the end of each month after 10 years? That's $50,000. So if you remember, $100 was $20,000, right? So that's a $30,000 gain in 10 years with just $150 invested more each month. And so, how about we say after 20 years, $185,000. We went to 30. You got over $500,000. Of course, you contributed $90,000, right? But I mean, I'm sure it's easier said than done to find a way to put away $250 at the end of each month. But if you can do this, I mean, you can see $90,000 with your contribution, but compound interest made you $454,000 just from you buying into this fund. I mean, you're basically making money while you sleep. And then, I mean, how about we say even 40 years? Then you're over $1 million, right? You're basically at 1.5 million. So if I was to come down here and look at the accumulation schedule, so this is 3,000 just basically invested yearly, and then this is the compound interest that it's making you, right? The interest. So after 30 years, you're already halfway there to be a millionaire, right? And then, I mean, you can see here, this is almost a $60,000 gain from year 30 to year 31, right? Just from putting $3,000 in, $57,000 basically you made just by buying into the ticker symbol SPY, right? So I hope that makes sense to you guys. I mean, you know, just for fun, let's say you put 500 after 20 years. Let's see what that is. 371,000. So, I mean, you can just see, you know, basically every single dip, like I said, has been a buy. So I hope this makes sense to you guys. If you have any questions, leave it in the comments below. If you enjoyed it, please like and subscribe. And I hope you guys have a good day.